My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job, not just entertain, educate, teach you. Call me 1-800-743-CNBC or tweet me at Jim Cramer. Look, everybody knows the visible bear market's now chapter and verse. When I walk down the street to get a haircut, I'm heckled about AMD and NVIDIA, two of the greatest companies of all time. But most of the semiconductor stocks got inducted into the Jellystone National Park ages ago, like a Micron, Corvo, Intel, Skyworks. They've all been tainted and have colored the tape mighty red with a genuine bear mauling. We get it. Even on a sedate day where the Dow inched up 30 points, S&P advanced 0.34%. Boy, that was done in the last few minutes. And the Nasdaq gained 0.74%. The semis have been hurt by a slowdown in gaming, a beatdown in personal computing, and a bruising in low-end cell phones. These bear markets are emblematic of the moment because they're nobody's fault. Although it doesn't help that China keeps locking down parts of its economy to deal with COVID because they refuse to use the most effective vaccines. When I say it's nobody's fault, I mean too many people bought PCs when they started working from home, so now there's less demand. And it's not NVIDIA's fault that their graphics cards were so perfect for cryptocurrency mining for Ethereum that, well, the crypto meltdown crushed them, just like 2018. Hey, now NVIDIA's even being punished for being too darn good because our government doesn't want China getting its hands on their high-end AI chips. All these declines are impossible to ignore. And it's the most visible bear market I have actually seen since year 2000. But tonight, I want to introduce you to a host of lower-profile bear markets, in part because many of these stocks have come down to the point where I think selling them, well, let's say, no longer makes a lot of sense. I actually picked an up day today. I mean, literally, remember, the market finished again, to do this piece, to start the show like this, because I know what I have to say right now is going to be pretty depressing. But let's start with autos, okay? The auto market, what can I say? Here's a group that's been beaten to a pulp by sellers who flock to own only one vehicle company, and that's Tesla. I am a huge believer in Ford and GM because their stocks are so cheap, especially Ford with that 4% yield. GM's doing some incredible things with self-driving. Ford has award-winning electric vehicles, just not enough of them. We always hear about how expensive this market is, but Ford's stock sells at 7 times earnings, GM's at 6. Is that expensive? Hey, they aren't alone. Goodyear Tire trades at about 6 times earnings, too. You think they've hit rock bottom? Lots of people keep calling them value traps, though. And the hedge fund playbook says you can't own the autos going into recession. What can I say? Even if you disagree with the playbook, and I do, the fact is that it trumps everything in this environment. You know what? We're sticking with the Ford for the charitable trust. You know why? Well, I'll tell you why, because we're going to talk about it tomorrow's must-see noon club meeting. You don't want to miss this one. But it's not easy to stick with any auto company that's got internal combustion engine business. They always call them ICE. It's like ICE. I mean, don't give me ICE. I mean, it's like, give me, what do they call them? Bears. Electric cars, absent Tesla, aren't immune either. Lucid's been miserable. Even as I went by a showroom the other day, it was packed. It's just not where you can afford to be. Second, lower profile bear market. How about getting mauled at the mall? Bears are roaming free all over the place in the shopping centers. You feel like a salmon in one of them Canadian streams when you invest in a mall retailer. Gap Stores is having an existential crisis. GameStop doesn't seem to be all that investable in its current incarnation, even if the apes love it. It's sold to you. It's brutal even to think about what's happened to it. A company like Nordstrom, where even the off-price business is weak. I do like Macy's, but it's being pulled down by the cohort. Have you looked at the stock of Kohl's lately? Don't waste your time. My charitable trust got hit by the American Eagle ugly stick. A lot of investors thought they'd be safe in American Eagle because of that juicy 5% yield until they paused the dividend. Even as it cost a fraction of the $200 million accelerated buyback that they did in June. You know what? It was just an idiot move, and I got to call it out. It was an idiot move. Everybody gets away with everything in this thing. They know nothing. Let's not forget the suppliers. PVH has been crushed. VF Corp's a nightmare. Contour Brands, Levi, doing well, but their stocks aren't. Common theme in this group. And who can forget Bed Bath & Beyond? If only the apes would pile into the stores, not just the stocks, they might learn what they're owning and change their minds. You want pain?
The House of Pain.
I'll give you some pain. How about the internet? All ways, shapes, and forms. Meta Platforms is the poster child. Just a company with a stock that switched neighborhoods in a real bad way. From the land of the new high to the land of the new low. And by the way, the lows seem to be plumbed on a daily basis. Pinterest. Oh, just acquire it to sell yourselves already. I mean, you can get it for a song. Snap. Let's say it's been snapped. Twitter might be rescued by Elon Musk's takeover, but no takebacks. But without him, I wouldn't be surprised if this stock literally got, I mean, this is really incredible. Cut in half. Hey, no wonder he wants out. Next bear market, the home. It's a veritable bear cave. I'll give you two in particular, just because they're so emblematic. Trex and AZEK, amazing companies. Faux wood. They've been thrown into the wood chipper on a daily basis. You cannot go near the paint stocks either. Hey, by the way, how low can the stock of an incredibly great company, Stanley Black & Decker, go? Beats me. Whole aisles in the wasteland of Lowe's and Home Depot. Don't look now. You might see something you like. We've seen something similar in telco and entertainment. Paramount, Comcast, parent company's network, Verizon, AT&T. They've all been trashed and mutilated, but nothing like the much discussed and dissected. People love to talk about the media, if they're in the media. Warner Brothers Discovery. This is one of the ugliest stocks I've ever seen. Only T-Mobile is unscathed. T-Mobile to this group is like Tesla to the autos. Now, we got some nascent bear markets, too. Like the one in steel. Nucor plummeted today on a weak pre-announcement, although it's nowhere near the decline in Cleveland Cliffs or the copper company Freeport. It looks like it's a possibility. I mean, I'm not kidding. For the first time today, the rails cracked. Downgrade of Union Pacific. We might be on the cusp of a railroad bear market. And how about conglomerate grizzlies like 3M? They haven't brought down the whole cohort, but who knows what's next? Maybe payment companies? Have you seen Block? Nothing to see here. Keep moving, keep moving. Oh, by the way, you might not know it, but we have rules in this show about the size of companies we can talk about. So many companies I follow, and I follow a couple thousand companies. As crazy as that is, but so many companies that I follow are now too small to mention on air. Literally hundreds of them are now too small. They're that pathetic. I love to roast the subscription companies that people are canceling, or the charging stocks, or the SPACs, but almost all of them have collapsed to the point where they're just too tiny to talk about here. Even if there weren't size restrictions, I don't know if I'd be able to say anything about these loser companies, because there's no way to describe them without using the kind of profanity that really doesn't belong on a family show like this. So why mention all these houses of pain? I am not trying to make you miserable. There are enough commentators who feel like that's their professional duty. Frankly, I bring them up because I'm sick and tired of hearing about how we're at the beginning of a giant rollover. The beginning? Beginning? I'm done with all that. Now is the time to get out calls. Where the heck were you 10 months ago when it mattered? It's not just the post-COVID kiss of death. It's multiple kisses, multiple fatalities. Sure, other stocks can and will follow these leaders down. But after listening to this screed, can we accept one thing? The devastation is broad. The loss is huge. The relentless selling horrific. We're going to see layoffs at so many of these companies. So it drives me nuts when people talk about how this market hasn't already been crushed and has much more to fall. Look at all these areas that have been already laid to waste. I mean, and there's so many more. I couldn't put them all in. Here's the bottom line. We need to accept that the winners in this environment are robbing Peter to pay Paul. But man, we're already nearly a year into this decline. I just wish the so-called professionals would act like it. Start looking for companies that are doing well to buy, rather than markets that are too weak and have to be sold. You know what I say? I say, ooh, time to buy. Beth in Georgia. Beth. Beth?
Hi, how are you?
I am good, Beth. How about you?
I am good. I thank you for all your wisdom.
You're very kind, Beth. Thank you. What's going on?
I'm a second-time caller, and I have a question. I made a lot of money in MongoDB about just over a year ago. I sold it over 500. Now it's down to like 247. I've been watching their revenues grow exponentially, but their losses are growing too. Is this a good time to get back in and hold it?
We cannot be in companies that are losing money. Beth, it's just a rule in the show. It's kept us in the game. Others aren't in the game. Keep it like that. Don't go back. Congratulations. Great call by you. It drives me nuts when people talk like this market hasn't been hurt. It's about to get crushed. Are you kidding me? We're nearly a year into this market decline, and I wish the so-called professionals would start being a little more empirical and less anecdotal. On Mad Money tonight, after yesterday's tech tumbles, it's time to take a look at a company like Etsy. I'm getting the latest from the company CEO. Then, with another hot CPI number, could today's bounce in oil be an actual red flag in the hopes of taming commodity inflation? I'm going off the charts to find out. And in the face of an increasingly tough market, could REITs be the opportunity your portfolio is searching for? I'm taking a closer look at some real good companies. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.